Hello and welcome to the Morningstar series Market Reaction. I'm Emma Wall and I'm joined today by Nick Watson, multi-asset fund manager for Janus Henderson, to talk about Trump's trade tariffs. Hi Nick.
Hi Emma.
So Trump has proposed some tariffs on commodities and it's got the world nervous. What has he proposed?
Sure. So for the time being, Donald Trump has proposed tariffs of about 25% on steel imports and 10% on aluminium imports into the United States. So that's sort of in the context of a trade war, which markets now become very concerned about. Markets don't like uncertainty, and given the current volatility in markets are not going to be enthusiastic about anything that might hinder economic growth going forwards. And
it shouldn't be too much of a surprise because it is this kind of protectionist stance which he got elected for. But of course, markets have reacted badly, in particular emerging markets in Asia.
Correct. I think if you look at the markets which have responded most negatively to this, it's been those more cyclical markets, those markets which are more exposed to global economic activity. So you mentioned emerging markets. Germany and Japan have both also struggled amidst this. You are completely correct to say he was elected off the back of this type of policy. And to be honest, we shouldn't really be surprised. A lot of what he's tried to do, whether it's immigration reform, fiscal stimulus or tax reform, he's all managed to get those through. It's also worth observing that he doesn't have to rely on Congress to get this new policy coming through. The final thing I'll say, there is an election coming up in Pittsburgh. I think it's on Tuesday, which the Republican Party are looking potentially like they might lose. And Pittsburgh is a very blue-collar working class base. So it may well be the case that Donald Trump is trying to rile up some enthusiasm amongst his usual electoral support to try to get that election a win for the Republican Party.
And in the short term, as you mentioned, we have seen market volatility across Asia and Germany and Japan. But long term, if he does get these proposals through, what are the markets that will be impacted? Presumably the commodities sectors will be impacted.
Yeah, and I think that's how you could have a read through to UK markets. I mean, as we all know, the FTSE 100, about 70% of revenues come from outside the UK. And you look at some of the large resources companies, let's say your Glencores or your Shells or BPs, they do have a read through to the commodity price rather than necessarily what's happening in the UK economy or the UK market. So that could be the sort of transfer mechanism that has an impact on the UK. On a more global basis, if this trade war rhetoric did really ramp up, and that's not necessarily what we're anticipating, but that's certainly something we need to be cognizant of. Again, those more cyclical markets, Japan, emerging markets themselves, could be more vulnerable. The final point I'll make on that is Donald Trump has been very assertive that China is a trade sort of influence, if you like, and he's trying to make sure that there's not this imbalance between the two countries. In terms of the actual policy that he's announced, China doesn't really get affected here. China does produce relatively cheap steel and relatively cheap aluminium, but that doesn't actually feed through to the US. The biggest of countries who would be affected by these tariffs are more their own allies. So you'd be talking there about Mexico, you'd be talking there about Canada. So those are countries that would be more affected by this rather than maybe the target which his political base is hoping for. And
you did mention the phrase trade war there. Do we anticipate, if this goes through, that there will be a sort of retaliation from some of those markets, which then it could, of course, make more seismic impact globally?
Yeah, and that's where the read-through comes through to the global economic backdrop. At the moment, globally, economic growth is pretty broad-based, it's pretty resilient, which is quite constructive for markets. But if you were to see the situation deteriorate, I think the EU's come out and said they might levy tariffs on Levi jeans, for example. China could potentially look at doing something around soybeans. So you can see how that naturally expands out into a wider economic shock. The other point I'd make is that these tariffs are actually quite inflationary. So for the US consumer, that's not necessarily immediately good news because their aluminium production base needs to take some time to get fired up. So it may well have a chilling impact on economic growth while boosting inflation, which is not necessarily a dynamic that markets are going to respond particularly favourably to.
Because higher inflation means more Fed rate rises.
Completely, and it's almost looking back at what was 2017 like. So 2017 we had positive economic growth, muted inflation, and you had supportive central banks in terms of maintaining dovish monetary policy and QE. And through that environment, markets did fantastically well. What have we seen through 2018? Well, the growth's still there, but we've also had inflation come through. So markets are now starting to realise they need to reprice some of these expensive parts of the market. Government bonds have sold off. You've seen some of the bond proxies have a tough time as well. So that policy part of that the sort of fantastic markets we saw in 2017 is now actually having the opposite effect on markets. So you've got the FTSE all share down 6 or 7% year to date. Yes, growth's good, but you don't have that same accommodative support from either government policy or monetary policy.
Nick, thank you very much.
You're welcome.
This is Emma Wall from Morningstar. Thank you for watching.